Are skyrocketing insurance rates, are they still threatening all of your commercial real estate investments in Florida? Are you worried about moving forward and maybe buying another property because the insurance rates and maybe because of the capacity is so limited, it won't even cover that property? What's the other thing we got to watch out for? The lenders, right? Is it time to, start using commercial non-recourse lenders again? Can we actually meet the insurance requirements that destroyed so many investors over the last 36 months? Well, here's my update. I'm Jerry Katz. I'm with Premier Protection Insurance Services. In a nutshell, what do? We increase the value of your properties by increasing your NOI through strategic methods and insurance. So I could say this, the worst of the insurance market is definitely behind us. It happened around 9 to 12 months ago where we reached a peak in pricing, and capacity wise, we were down to 15 to 20% of the capacity of the insurance market. Today, things are improving, but how far have they improved? So let's just take a look at the overall scenario, some solutions, and some considerations moving forward over the next 12 months, and the fact that we're still in hurricane season until November 30th. It's funny how that got extended. Used to be November 1. Now it's November 30th on your insurance policies. So let's take a look at the overall history. Really, what threw this off was October of 22 when the storms hit the West Coast, and then another in Vero and Daytona. As I said in my previous videos, when the storms hit Florida, the wind pools are forced to pay out large, claims and things of that nature. But two things happened. We had interest rates go up 500 basis points. So that led to a January of 2023 in the reinsurance markets with no liquidity, no capacity. All the institutional investors got beaten down because of the hurricanes and the payouts. So led to a double whammy disaster. So at that time, Citizens, which was a major solution that we used here, which most of my competitors did not because it's complicated and pays less commission. So we went to Citizens. Citizens was underutilized at that point, and Citizens, let's call it, would shrink in between times of storms in Florida. So at that time, Citizens was this big, and the open market in a low interest rate environment was super competitive because we didn't have storms for 6-7 years. We had low interest rates, institutional money pouring into the insurance market. So beautiful, competitive landscape, right? Rosy time for insurance and interest rates. But what happens when the storms come? And this is the same cycle that repeats itself ever since I've been in Florida investing in real estate and owning an insurance agency, almost 24 years. I moved down here from New York in 2000. So Citizens gets small, right, during that period. We shifted all the clients when all the capacity was lost to Citizens. Today, Citizens is huge. It's blown up. Every insurance agent that didn't use Citizens, we eventually forced them to if they wanted to stay with their other agents, or they came to us. The size of Premier tripled in 24 months because we were the one with that Citizen solution and we weren't afraid to implement it. They went from 3 underwriters to 24. Now, what's going on with Citizens? Their renewals are coming in higher. They're trying to match the open market rates, which are much higher, things of that nature. And in certain cases, there's actually capacity in the market. A couple carriers like Scottsdale's and Lloyd's came in this year in January 2024 and started competing, but not within a mile of the coast. At least, let's call it 2 miles from the coast and west. And all of a sudden, we saw the first light where we were like, whoa, we actually do not have to go to Citizens to write these buildings. Now, I'm really focused on class, let's call it D, C, and B properties. Class A construction, 2005 or newer, there is competitive markets today. And you can get a very reasonable price per door on insurance when it comes to wind, hazard, even general liability on the newer construction. So that's always a niche. If that's your niche, Class A, it's good. It's strong because that's the area of low risk, and the premiums are competitive because institutions are involved and competing and so forth, and capacity. Right? If you're an investor, where do you want to invest your money? Right? Low risk, high return. That's Class A. On the beach, it has gone up 30 or 40%, but not to the effect of a 300% rise that we saw on Class, B, C, and D properties. So today, Citizens has swollen, right, tremendously, and a couple carriers have come into the market. Why is Citizens swelling like this? Well, number one, they approved 2 rate hikes at 18%. And now Citizens also has something at any time, they can raise their rates up to 45% overnight. They don't do it. And if you look at the policies, only maybe 1%, 2% of the time they're doing it. Where are they doing it? They're doing it in areas with 1950s, 60s, 70s construction, mostly in Tri-County. Why? And near the beach. Why? Because no one will write that still. So areas that Citizens has massive risk, right? Or they've given tons of capacity, hundreds of millions of dollars in insurance. So those are the areas that are most affected. They're increasing what they call catastrophe surcharges, sometimes 10, 15 to 20%. Why? Because the rule of thumb is if the open market is within 20% of Citizens, then you have to be taken out and go to the open market. There are 3 or 4 carriers that have entered the commercial world, one being Core, another one being Slide. They go under different names in the commercial world, but those are the residential names. So that's what's happening. So as Citizens grows, and we haven't seen a storm, a major storm in almost 24 months. Now we are in October. No, we're not. We are in September, and we have October, and we have November. And there is some activity in the tropics as we speak. So here's what I'm trying to say to you. As long as we don't have any storms, the market should continue to prove. Why? Interest rates are starting to tick down because of the election and all that good stuff that's going on. And institutions forget about the storms of 22 and they come looking to make some money. So the markets are improving. Is it the best? No. But another reason why they improve, because rates are higher. Regardless, if I go back to 36 months, we're still 60 to 100% higher than where we were 36 months ago. So just overall, picture the market. Is it possible to get down to $2,000 a door or sub 2,000 like we did for many clients in 23 and in 24? It is. Tri-County, it's difficult because of Citizens surcharges and no real competitors in the marketplace. Outside of Tri-County, no issue. Citizens is still a great solution. Other carriers are also entering the market, but the surcharges, we're not seeing them, in Jacksonville and the Panhandle, Tallahassee, those areas, even Ocala, Orlando, Tampa a little bit because of the density. But the more rural the area, Citizens is still the best solution. Now keep in mind, non-recourse lending. This is always an issue, and it's always going to be an issue. Now I know on Class A properties, it's a slam dunk because insurance rates will keep you sub 2,000 a door. But in Class, B, C, and D properties, very difficult today to get the capacity for the insurance requirements for those loans. Still, older buildings are going to require law and ordinance coverage at 100%. There's only 2, 3, 4 carriers like your AmRisks and your Velocities that are even willing to do that. And their prices are still through the roof. And their deductibles aren't good, things of that nature. So one of the things I always say, what is critical in securing, sub 2,000 insurance per door in multifamily in South Florida is your lender. Focus on the lender. So if you have a friendly lender, it just makes such a difference. If I look at the crisis and which lenders were willing to work with us, work with our clients, waive things that we couldn't get in order not to get the DSCRs and the loan buried, the lender is key. And as working with us, Premier Protection, we've got so many good value-added partners that increase your net operating income. It's crazy. I've got lenders that will waive flood, that will waive wind, and we refer them out. Why? Because your NOI is the most important thing, that you care about and that we care about. Having the right insurance agent makes all the difference. So I hope I taught you a little bit of something. I will be launching a YouTube channel in the near future, so keep an eye. And if you want to watch any other videos on this channel, just go left or right and you'll find them. Here's to happy real estate hunting. Let's increase our NOI.